is up, my fellow goons? It's Kalen here, Mr. David as always, looking way better than I am.
Feeling worse though. I
Oh
bet.
yeah, were you out late last night?
It's been a little tough month, man.
What time do you usually go to bed? Because I swear to man, I get some messages from you at like 3 in the morning, sometimes like in the middle of the day. Like I
I
feel like
I,
you're
ba-
never asleep.
I basically take naps throughout the day and night, so there's no bedtime. It's just yeah.
You're kind of like a rabbit. You just sleep for like 20 minutes, wake up for half hour, sleep for 20 minutes.
Yes, quite often involuntarily.
All right. Well, I'll take the reins on this episode then, so you can just relax and listen.
Appreciate it.
All right. So we're gonna open up Microsoft Paint here because this is just the go-to to make a lot of money. Um,
Oh, for those that want to know, Kaylin's gonna give out how to design a strategy, and I think it's so clutch that she's
yes.
doing that.
Yes. So I'm not gonna tell you guys my strategy because
It wouldn't work for them anyway.
I mean, it would work for some people. Like everybody's different, right? And I don't like people enough to give away all my secrets. Only David and Sam get my secrets.
See, that's not my biggest fear. My biggest fear is giving out the secret and the guy coming back going, "It didn't work." No, it's user error, you dumbass.
Oh yeah. Yeah, yeah, exactly. So user error aside, I mean, like in all seriousness, this I'm going to give you guys like a pretty good framework to set yourself up for trading. So like trading, not investing. All right. So whether this is swing trading, day trading, whatever your time frame is, this works pretty good. The longer the time frame, the longer it's going to take you to accumulate this data. The shorter the time frame, the quicker you get it. So like if you guys are trying to day trade, you could probably get enough data to figure something out that I'm going to show you here in like maybe about like 3-4 months. Which again, I'm like, oh, 3-4 months, that's so long. I want to know how to do it now. Forget that. If that's your thought process, don't trade. You're gonna lose all your money. Okay, like this is work. You have to put in the time. You got to put in hours every day. Figure this shit out. If you don't, you're not gonna make money. Like this, it's not a joke. It's a business. So if you're doing swing trading and you're looking at charts where patterns are playing out over weeks or months, like it could take you a year, it could take you 2 years to accumulate enough data to be consistent. But again, like it took me almost 4 years to start making money. I think it took David about the same. So this is not a quick process, guys. Like that's just the reality of it. Um, but anyway, so we'll get into this. Basically, I know I've kind of breezed over this a couple times in previous episodes, but like I wanted to really give you guys like a specific framework that you can use to set up your own strategy. So like this is kind of like I'm assuming at this point generally how to read charts. You know roughly support and resistance lines. So we're not going to go through that. Like we've talked about that in our other episodes, so you guys can flip back and we go through all that kind of stuff. Whatever patterns. I mean, you can Google. What's a bull flag? What's a head and shoulders? Like all that stuff you can find easily. So, but the bottom line is like, okay, how do I implement that, right? Like if I see say a head and shoulders pattern, or I see like a pennant, like okay, I see it, but I saw and I bought the shares and then it sold off, or like I shorted and then it went the other way. Like how come I'm seeing the pattern but it's not working, right? Like that's the most frustrating part. So now that you know how to read charts, it's everything around that. So I got them written out here. What do I got? 9. Yeah, so I got 9 things that I like to look at that's worked for me that I think you guys should look at as well. So the first one here, I'll write them all out, is your float. Okay. Just gonna just write everything in capitals because it's easier to read.
Yeah, you're
Float.
really
So
big on float.
I'm huge on float, man. That like it's like float is everything because it's how fast the stock's going to move, right? It's basically like it gives you like a really quick snapshot of like how junky the company is and how fast it's going to move. So like if something has a lower float, like the lower the float, the lower the market cap, usually the more shit the company is. Usually the faster it's going to move, right? That's pretty much the bottom line. So float is number one. So actually, let's take a step back here. So how do we get to this point where we're looking at this stuff? First thing I want you guys to do is figure out what you want to try and do. Okay, like do you want to be a short trader? Do you want to be a long trader? I'm gonna bias this towards longs because we're in Canada. In Canada, it's very hard to short. There's not a lot of brokers that let you do that. It's very expensive. I do that with my brokers. I pay a lot of money for it. It sucks. So until you really know how to do it, it's probably not the best option. So not a long bias trader, but you can use this to be a long bias trader. So first thing I want you guys to do is let's just talk in daily time frames because it's easier. So every day when the market closes, what I want you guys to do is see what stocks move the most. So you can go on, finviz.com. I'll write that here, finviz.com. You can go on there. It's a free scanner, and you guys can play around with how to set stuff up. I'm not going to go into crazy detail in this episode. We're just going to keep it short and sweet. But finviz.com, they have scanners built into there. It's all free. You can just search for stuff that's new top gainers. David, we lost you there. You still
Oh,
there?
I'm here. I'm here. I know
Okay,
what
David
happened.
just blacked out. All right.
Yeah.
I'll keep
Even my
going.
camera's sleepy.
Hey.
I said even my camera's sleepy.
Oh. All right. Well, I'll keep going because I'm good. So yeah, go to finviz.com. That's a good place to start. Or you can go like in your broker, like if you have interactive brokers or Quest Trade or E-Trade or whatever you're using. Most brokers have a scanner built into them, so they'll tell you like your top gainers, your top losers for the day. So if you want to make money, you want to look for the biggest movers. So at the end of every day, look at what stocks move the most, which ones have the biggest gain. Take say any stock that is up over 15 or 20% from the open to the close, and then just screenshot it. Like for me, like I screenshot everything. So I screenshot, like I have a big framework. So I'll have like the 1 minute chart, I have the line chart in the 1 minute, I have the 3 minute chart, and I have the daily chart. So I have all those kind of like organized so I can save that. And that's what I look at because when you're trying to devise a system, you don't know right away what you're looking for. So like you might see something on the daily chart that you didn't pick up in the 1 minute chart that affects how that trade works out, right? So like I just try and capture as much information as I can in each image so that way when I go back, like, if I get 3 months down the road of trying to track a system and then all of a sudden I'm like, oh, I needed to know what this candle looked like on the 3 minute chart. And then it's like, fuck, I don't have the 3 minute chart saved on any of these. And now like I either got to go back and it takes forever or I got to start tracking all over again. So just try and capture like as much information as you can when you're screenshotting these things. So just do that every day, for 2, 3, 4 months and just, accumulate a few hundred charts, right? And like, again, if you're looking at swing trading where these patterns take weeks or months to play out, it's just going to take you longer to accumulate all that data, which is fine. You just have to be a little more patient. So once you've done that, let's just say, okay, I have 300 charts saved. Like, we're in October now, and like just me personally, I think I have like 11 or 1,200 charts that I've saved this year, and like I have maybe 5,000 or 6,000 that I've saved over the past 4 years. So like I have a lot of data. I still do this every single day. I track everything. So you have all these saved. Next step that you want to do is say, okay, which ones, like for me, it's like which ones are the cleanest, like which ones were the nicest moves, like they didn't have a bunch of wacky, choppy action. They were just really nice, like smooth moves, the biggest gainers. And then like, let's say you go from, 300 charts down to like, I don't know, 150 charts, like it cuts in half, right? So you're kind of starting to narrow that down a little bit. And then you're going to want to look at it and say, okay, which ones like overnight gappers, for example. Like let's say you're playing like, you want to buy at the close and sell at the open the next day. Like that's kind of what you're looking for because, you're working, you can't trade during those hours. So like you just have to be able to look at something, buy it at the close, sell it at the open on the gap up. So you're going to want to try and figure out which ones are the best for that, right? So you have this accumulation of data, right? You have 150 charts, say. Next thing you want to do is try and figure out all the fundamentals behind it, because the tricky thing is when you're saving these charts at the end of every day, you're seeing the chart that's up 200%. Well, if I draw, this is going to be my special drawing skills again. So if you're drawing, if you're drawing charts, long bias, let's say, just for example, I don't know if there's a pattern. Let's let's say you're drawing, you see this chart. This is not a real chart. I'm just saying, like, let's just say this is what you see, right? So you see this. I don't know if that's actually a setup. I just pulled that out of my ass. So so you see this, right? And you have 150 charts that kind of look somewhat similar to this. They kind of go at the same-ish time, whatever. Well, the problem is that you don't know how many charts, did this and then did that, right? Because at the end of the day, this thing's up 20% up here. So if that's up 20%, then this is the only one that you're going to actually see on that scanner. So there could have been hundreds that faded off into nothing that you just didn't pick up. But up to that, up to that kind of key point right here where the stock turns around, everything was the same.
I just sent you the real thing. Exactly what you drew.
Did you?
Yeah.
Oh yeah. So that is actually all right. So this does exist, guys. So yeah, this is apparently a real pattern. I guess I'm just that good.
I'll tell you how I did that. It's because, like Kaylin saves charts, I draw like a madman on any chart, on any time frame. I just spend hours and hours and hours studying this stuff.
Yeah, and so do I. I mean, like both been doing this for years, and every single day we spend hours looking at the markets. Any professional trader would tell you the same thing. We're not even professionals. We just do this like part time.
Yeah.
Yeah. So this is what's going to happen is you're going to have say 100, 150 charts, whatever it is, of something that looks kind of like this, and like they're all going to be different, right? Like you're going to have all these charts that went up 20%. Maybe some kind of look like this, right? Maybe some kind of look like this, right? Like they're all going to be kind of different. So what you're going to want to do is narrow it down to the point where you have charts that look pretty similar and you have the highest quantity of them because you want frequency, right? Like you don't want to say, oh, this one moved 200% in a day, but I only have 2 examples of it over the past 3 months, right? Like that's probably not like super viable because it doesn't happen that often. Like ideally you want to have like relative frequency of these things. So for argument's sake, let's say this is the pattern that we're seeing fairly often. Like, you're seeing it weekly kind of thing, for example. So the next thing you want to do is figure out, because again, we're trying to decipher how can we determine that it's not going to sell off? How can we determine that if we see this, it's going to do what we want it to do? Well, that's where the fundamentals come in. So this is why just reading technicals alone isn't going to get you guys where you want to be. And you're going to see all these, bull pennants and flags and head and shoulders that don't work out. And it's going to drive you insane because you're going to say, this is exactly, you overlay the Google image. Like, this is what it's supposed to do. Why isn't it doing that? It's like, okay, it's because of the fundamentals. So first thing I always look at is float, right? I know I've said this before, but it's really important. So the float, essentially, you can think of it, it dictates how fast the stock is going to move. So the website I use is filingspro.com. So that website is going to give you basically everything you need to know about a stock. It's going to show you really quick snapshot, float, market cap, short float, institutional ownership, any filings, any offerings, any of that kind of stuff is on there. It's really easy to find. So that's what I use for pretty much everything. So what you're going to want to do is look at the float on these things. So let's just say, you find the best movers are, I don't know, between 20 to 100 million float, right? Like that's when you're seeing these stocks are having the biggest, smoothest, most powerful moves. And then the next thing you want to look at is the market cap. So the market cap basically is the value of the company. So it's essentially like so the float and outstanding shares, first of all, are different. Outstanding shares is a total amount of shares that the company has outstanding, but some of them are owned by insiders, some of them are privately owned. So that's not the amount that's actually traded on the open market. The float is what's traded on the open market. So, you could have a company that has 200 million outstanding shares, but the float is 20 million. It's going to trade like a 20 million float stock. So that's important to keep in mind. The market cap tells you the value of the company. The higher the market cap, basically the more institutionalized it's going to be. Like the more it's going to have algos in it, the more it's going to kind of, have big time investors, long-term traders that are going to kind of mess with, shorter term fluctuations a little bit more. So, for example, let's just say, I like stuff under 100 million market cap personally, but let's just say for this type of thing, you find 200 to say, 500 million market cap. Those stocks seem to trade out really nice. So next thing you want to look at is the short float. So why is the short float important? Well, we're looking at this as a long bias trader, you want to see a high short float because the higher the short float is, that is gives you a higher potential for shorts to get squeezed because it's kind of contrary to what you'd think. Like shorts are the natural buyers and longs are the natural sellers, right? So if you have a stock that's really long heavy, those are the ones that they can just waterfall down like crazy because there's nobody covering their positions, right? Like longs aren't going to buy on that type of panic. And same with, stocks that are really short heavy, those are the ones that get squeezed and they're going to blow the lid off because no, like who's buying when the stock's gone up 200% in a day, parabolic? Nobody's going to be buying that thing long. That's all shorts covering. So shorts are the natural buyers when a stock gets pushed up. So if you're seeing, on all these things, like you're seeing, like, I don't know, maybe every single one that you've pulled off is higher than 20% short float, then you say, okay, like maybe 20 to 40% short float. That's kind of the range that I'm seeing a lot of these really powerful moves from, like AMC, GME, all that kind of stuff. The whole premise behind that was that they had a really high short float percentage because they knew that they were going to squeeze the shorts and it was going to force them to cover, which it did.
I think
Um,
this is where it's important to just a little bit important to understand how the market functions basically, right? In order for you to short a stock, you have to borrow it and then you're selling it into the market, which means
right,
you naturally have to buy it back at some point and repay it. So like
exactly.
I said, they're actually buyers.
Yeah. Shorts are always the natural buyers, especially in the powerful moves. Like when you get those really big moves, there's not very many longs that are buying on those big spikes because most people that are going long, like when a stock gets to a certain point, like even people that don't know what they're doing, they're thinking, okay, this is way too high to buy. Like let's say a stock goes from like, $2 pretty much straight up to like $7, for example, in like 10 minutes, right? Like I've seen it happen. Let's just say that happens and then it halts, right? Who's going to buy that stock? Who's going to buy it and go long at $7? Nobody. But that thing might open and rip right to $20. Where's all that buying pressure coming from? It's coming from shorts that are covering because they're getting blown out of their positions. Their brokers are giving them margin calls. That's where the buying pressure comes from. So, like for me as a short bias trader, I'm so strict. Like if I see 10% short float, I'm kind of like, I'll probably size down. If I see 20% short float, I don't even touch it. I don't care how good the setup is. I don't care if everything, I don't care if I have 10 factors lining up. If I see 20% short float, don't care. I'm not even going to look at it because I know that, maybe 8 times out of 10 it's going to work. The one time it doesn't, it's going to halt up so fast that I'm just going to blow my whole account. So it's not even worth it. So that's, again, if you're a long bias trader, that's a good thing. You want to see a higher short float. The next thing you want to keep an eye on is institutional. Spell it right. Institutional ownership. Sorry, guys, I'm a trader. I'm not good at typing.
We're all goons here. We don't need to spell.
I don't know how to spell, but institutional ownership. So um, this you can think of as, I guess, almost like the viability, like how real a company is. So companies normally that have a higher institutional ownership, that means that they're owned by like other companies or other people. Like they haven't real long term investors essentially. So like if you see something that has like 0% institutional ownership, that means the stock is basically only traded by idiots, right? It's only traded on the markets by people that are day trading. If you see something that's like 80% institutional ownership, that means that it has a lot of like businesses invested in it, a lot of really high net worth individuals invested in it, a lot of people that really think this company is worth something. So institutional ownership, let's just say on these long bias moves, you're looking for 60%, 60% plus. That's kind of where your best moves are, right? So um, that's just another, yeah, again, it's just another thing you can look at. Like that just shows like people have some faith in this company, essentially, is what you can think of that as.
Well, people who have money, who have been educated about money, and who have very smart accountants are basically giving this company a vote of confidence.
Exactly. Like they're investing money into the business to help this business grow. So if you're seeing a high institutional ownership, that's a good sign on the long. It's a bad sign on the short side. Like again, I'm kind of setting. It's funny because I'm a short seller, but I'm kind of setting this up a little bit more long biased. But I mean, you can kind of market cap kind of goes both ways. It depends. But like short float, institutional ownership, like those two numbers, you want those basically down at zero if you're shorting. You want them high as possible if you're going long. The next thing that I look at, I don't put too much weight in this. It just kind of gives me a bit of information, is the registrations.
What's that?
So those are basically all your filings, like your shelves, your warrants, your at the market offerings, all that kind of stuff. So like if you look, and again, this is all on filingspro.com. So if you guys type in any ticker, it'll show you a whole list. It'll show you the dollar value. So it'll show you like, let's say you open a stock and it's got 5 registrations. It might be like, at the market offering $150 million, shelf registration, give you the dollar value, the amount. So um, I don't put too much weight in that. Like let's just say, for example, registrations, you want to see 0, right? Because you're long biased. So if there's no registrations, it essentially means that the company is not trying to dump shares. They're not trying to sell stock. They're not trying to pump it to sell to, you guys, put out some bogus press release because they got $150 million at the market offering. If you guys don't know what offerings or shelves are, it's going to take way too long to get into, so you can do some Google searching. Maybe we'll do an episode on that later. Basically, if you see an offering, it's bad. It means that the company is trying to sell shares to the public, us, you guys, to make money for themselves. So that's why a lot of the times when you see these stocks, they come out with like a bogus press release, the stock goes up and then it comes straight back down and then the offering goes away. Wonder what happened? Company pumped the stock. They hit a $150 million sell button, made all their money, and now they can coast along for another 6 months on that $150 million until they have to do it again to stay from going bankrupt. Right? That's like the really simple way of looking at that. So, for me, like if I see a registration, if I see 5, if I see 6, I mean, it doesn't really care. Like I don't really care. It's just like I know that they're selling shares, so I know that's not a good sign. It's good for me on the short side. If you guys are long, the less, if there's 0, even better, right?
Do you have a sorry? Do you have a time frame? Because I mean, I'm guessing frequency might have something. Like if you did like 6 within 6 months, so basically once a month, that sucks. But if you did,
Yeah, yeah, time frame has a good, like, I mean, sometimes, because what they'll do is they'll file for the offering with the SEC, and then once it gets approved, you get an effect through. So if you look on Filings Pro, you'll see like a 424B, which is just like a market offering. If you see an effect attached to that, that means that it's effective, which means they can do that anytime they want. So what you'll see, shockingly, what you'll see a lot of times is they'll have some big press release, like, say it's October 30th today, and the stock's up 200% pre-market, and you'll look on Filings Pro and you'll say, huh, they had an effect come through yesterday for $200 million. Wonder what they're gonna do. They're gonna sell all those shares today. So that's why they had the press release, pump the stock up, because if they have 20 million shares they can sell, then they don't want to sell it at $2. They want to sell them at $6. So let's put out a press release and we'll dump all those shares, right?
we don't have to do it this episode, but I'm really curious if you looked up Nikola. I want to see what they look like because that's basically they've been at their MO. Their entire business model was not selling trucks or cars; it was selling shares. And so, like every 6 months, they would pivot. Like they started with like clean coal. The truck was clean coal, and then became hydrogen, and became this and that. It's like every 6 months they pivoted to a different new technology.
Yeah, that's probably what it is. Is they're just trying to sell it. And
Yeah.
like, I mean, sometimes companies kind of have to do that. Going like, you see that a lot in biotechs and things like that, where they kind of like they need to raise money to do the research, and like sometimes they come out and they become great companies, right? But like at this stage, that's not a good sign, right? So again, if you're long biased, you don't see any registrations, good sign. Next thing you want to look at is news. So news to a degree, right? Like, I mean, if you're looking at like, I'm not going to go into super tons of detail here, but like just try and find some general correlations. Like, let's say every time that you see it's earnings news and the stocks run really well, then maybe that's your best setup. Like for me, one of the things that I don't play is, like anything with like a really famous name on it. Like, we had DWALK this week or last week or whatever, like Trump's name was attached to it. So like, I'm not going to touch that for a while until it really simmers down, because that's got way too much press. It's got way too much attention for me on the short side. Same with like biotech phase 2s, phase 3s. I never short those. Like if I see those things up, I know it's garbage. I don't care. I don't short them because I don't know anything about science. I don't know anything about phase 2, phase 3 biotechs. Phase 1, I'll play because phase 1 is really preliminary. It's usually kind of shitty anyways. doesn't really mean much. But like by the time they get to phase two, they're kind of getting down the pipeline of doing testing and stuff. So like it's becoming a little bit more legitimate. So they might actually have like real buyers come in. So I don't play those, but that's why like for news, like you guys can kind of, that kind of comes with just time of seeing what things do. So just try and get an idea of what news has pumped the stock or pushed it up for the day, and then you guys can go from there. Uh, Next thing, frequency. I guess we already talked about that. Kind of trying to find how like ones that happen more regularly. And then the last one is your risk reward. Yeah, I spelled those right. Look at that. Risk reward. That's probably the most important of them all. So, where are you going to buy this thing? When do you know that it's doing what you want it to? And when are you going to get out? So, let's do a little drawing here. I don't know how to erase that also. I'm just going to, oh, wait, there's an eraser. That's going to take way too long. Okay. I'll draw this one in blue. So, let's just say you're going long. You have a chart that looks like this. It dips way down, and then there's a bounce, and then it goes way up like that, right? Let's just say that's what you're looking for. So let's just say right here is where you are looking to buy. So where's your risk and what's your potential reward? Now, for me, like I'd be looking to risk under that bottom. So, but what's your slippage is kind of a really important thing. So, the patterns that I trade personally, all of my top patterns, I know like I play in a specific dollar range as well. Like I really like stocks that are between like $2 to like $7 is kind of like my bread and butter. Over 10 I suck at, so I usually don't play very much. More expensive stuff I'm not that great at. But in that range, that's kind of my bread and butter. And I know for a fact that if all of my fundamental stuff lines up perfectly and the chart lines up perfectly, the stock will never ever go 20 cents past where my line is. So I can get in full size on whatever line I'm looking at, which in this case is this line right here, right? This line right at the bottom. So I know for me on my setups that if I get in full size right here, it will never go 20 cents past that level. And if it does, the pattern is not working. So I can size into this accordingly. I can buy or I can short 1,000 shares, and I know that my max loss is always going to be $200 because it will never ever go that far. And if it does, the pattern's broken. It's probably going to just keep going and it's going to rip people's faces off, or it'll be that one in a million where you get that little wick through, it stops me out, it goes the other way, and I'm pissed and I cry and I don't care, and then I wake up the next day and everything's fine. So, but then you want to look at your reward, right? So one of the tricky things to find out here is, let's say you want to kind of relate this to your filings, right? And you want to look for the best, highest odds setup. So let's just say, if I do this in a different color, kind of run into colors here. I'm just going to do this in red. Let's say sometimes this thing goes like this, and then it comes down and it fades off. So why does that happen? Let's just say maybe in this scenario, your short float is 10% and your institutional ownership is 30% or less. So it's 10% or less, 30% or less. And sometimes when you get those numbers, you'll have this big move, right? You'll have this big move up here. But maybe half the time you have this kind of little, frumpy move down here where it just goes up a bit and sells off. And if this line here, if this line here is also 20 cents, then you don't want to be playing that because you're one-to-one risk reward, right? So you don't want to take that move if you see the perfect pattern, you see the perfect base, but your short float and your institutional ownership are not in your 20 to 40% or your 60 plus range. So your odds of having a good risk to reward, even though the chart pattern is perfect, is not good. So there's two things you can do. If you're a degenerate trader like we both are, you can just size down, right? So you could say, okay, I'm going to size down. I'm going to risk $50 to potentially make $50. That's fine, right? But if everything's lining up perfectly and you're in this 20 to 40 range, you're above 60%, that's when you can size in full size down here. I was just getting really ugly. That's when you can size in full size down here because you know that, say, 85% of the time, you're going to get up to a level where, you're making 80 cents on this trade, right? Like it always gets to that level. That's why, like the last episode we recorded where we were talking about Tesla and Shiba chart analysis, that's your risk to reward, right? Like those are the ones where I can go full size because I trade line to line. So like I'll have a level up here that I'm looking for. Let's just say it's there, it's some daily resistance, whatever. The setups that I play, I know that 93% of the time, we've talked about this in previous episodes, 93% of the time, when all my fundamentals line up, when the chart pattern lines up, when all this stuff works out perfectly and everything's right in my range, I know that 93% of the time I will not go past 20% risk and I will hit that next line. So I can get it in full size down here and I can sell full size up here because I know that the odds are 93% that that move's going to work. And that's how you make money. Because if you're trying to play these little moves, if you're trying to say, okay, well, everything's good, but the market cap's pretty out of whack, like that's when you're going to drive yourself nuts because confidence is number one in trading. And this is something that I'm still working on right now. Confidence is the biggest thing because what's going to happen, and I know this from experience, David, I'm sure you know as well. Let's just say the markets are a little bit slow. It's not a great long market. Every time this stock comes down, you're not really seeing anything that great. It's been 3 weeks and none of your fundamentals are really lining up perfectly. And you keep seeing like every day you've seen a chart that does, it does this, it does the little, it comes down here and then it flops and it comes down here and flops. So you're thinking, fuck, like I keep seeing this and it keeps going up 20% and selling off. Why don't I just start taking this 20% move? And then you'll start say, okay, I'll put, 200 shares on here and you make 40 bucks. The next day, yeah, all right, I'll put, 300 shares and you make 30 bucks. And you say, okay, well, 400 shares and you make 40 bucks. And you do this for a month, right? You keep going and you're like, all right, well, I'll just keep doing this. Like fundamentals, they're not that great, but whatever. It just kind of keeps working. It keeps working. Well, all of a sudden, one day you're going to wake up and it's going to go down to here and it's going to go to your 20% line down there where your risk is. And you're going to say, well, whatever. Like, and at this point, you've been doing this so long on these, B minus setups that now you're at 2,000 shares. So you're down 400 bucks. You're down here. And you're thinking, okay, I literally haven't lost in 6 weeks. Like, I'm going to be right. Let's just throw some more on here, pull my average up, throw in another 1,000 shares, comes up a little bit. You say, okay, perfect, I'm right. And then all of a sudden it goes wham, drops down. Now all of a sudden you've lost 3 grand. It's your last 6 weeks profits. You're losing your mind. You're pissed. Confidence is out the window. The next morning you're going to wake up. You're not even going to want to trade. And that's what happens. It's happened to me a bunch of times. I still waver in and out of doing that. I'm sure David, you do as well. So that's why it's really important, to get everything to line up. So, I mean, that's pretty much, I think, a good framework to set up your own systems is start with getting chart patterns, save as many as you can that are the big movers because anything that moves a lot is going to make you a lot of money. You need volatility. You don't want to be trying to trade stuff that's just chopping sideways, any of that kind of stuff. It's not where the money is. You want to try and look for big moves, look for big shorts, whatever you're trying to trade. Get the best, cleanest charts, pull those aside. Below every, I could, some of my spreadsheets are like miles long because I literally have like 2 charts side by side on my Excel and I have all the information written below. And I just have like chart all the way down for like, 2,000 lines on Excel. But then I'll sit there, on a Saturday night and relax and scroll through and be like, oh, okay, yeah, these are all good. And I'll just look at the numbers and then I'll look at one, like, I'll look at one and I'll say, oh, I kind of flip back and say, oh, the market cap was kind of high on that one. And then I'll look at the chart and I'll be like, yeah, that was pretty ugly. Like it was really a choppy, messy, kind of scary looking trade. And then I'll just delete it because I'm like, I don't even want to look at those. And then you scroll through and you're like, all right, I got, this one's good, this one's good, this one's good. And all the fundamental, like, and then you look at them, all the fundamentals are lining up. And then you'll see another one that like kind of looks a little wacky. And you're like, oh, that one looks a little sketchy. And you look and you're like, oh, the float on that one was 200 million. And I usually like to trade around 50 million. And you'll say, yeah, I don't even want to look at that. And like, eventually you'll get your system so refined that like, you'll be confident to put size on the right trades. And that's the key because like, if you're always scared and you're always kind of like, like, all right, like, okay, I'll go with like 100 shares or 50 shares, and then you like panic out when you make, it goes up like a percent, and then you panic and you sell and you make $6, and you're like, okay, I was green, like this is great. And then you take a $20 loss, you take a $30 loss, you take a $40 loss, and then it's like the next time it's like, all right, I'm up $8, and then you sell, and you're like, okay, I was green. Like, that's the problem. Is like the biggest thing is confidence. So like if you can comfortably go into a trade knowing that you have all this data to back yourself, that it's gonna work, and you have a set risk that if it hits that risk, then the pattern isn't gonna work. Like you're going to be confident to go into the next trade with big size, and that's how you're going to make money. Like we were just talking about how we know guys that trade like 10 times a year because their setups are so specific that they only trade such detailed stocks that anything else they don't even bother with. So that's how you're going to make a lot of money, is eliminate all those stupid losers. That's going to grow your confidence as a trader, and you're going to make way more money way faster.
So just in the last 7 months, I literally lived all of that. Like if you remember back in the winter, I stopped trading futures because I got into that lull trying to. First, I was making the 20% moves, and it was the 15. Then I was playing the 12. Then I was playing the 10. I was just getting, and the smaller the moves got, the more I got chewed up.
Yeah.
And it's because I kept winning, so that I had that expectation of, okay, I only won twice this week. I won 3 the last 6 weeks. I need to keep it going, which is the wrong way to think about it.
Yeah. Exactly.
And I got
That's what ends up happening, right? Is like, and like I still do it. Like I was doing it like over the past couple of weeks. I found myself falling into this exact same pattern that I'm teaching you guys not to do, because it's hard. It's really hard to pay attention to. But like you just, it's just like your range just gets smaller and smaller and smaller over this slow period of time. You don't even know what's happening, and then you're sizing up and you're getting bigger and bigger and bigger and bigger. And then all of a sudden, it's like my average profit is maybe 10 cents on a stock, but like one day I'll wake up and I'll take like an 80-cent loss. And it's like, okay, well, that literally just blew the last 15 trades worth of profit. Right. So that's probably the biggest thing right there, is just knowing what to eliminate. The hardest thing is not
Yeah,
to trade. The hardest thing is not to trade.
absolutely. And I've gone the other direction now too, where it's like I don't take trades that often anymore. Like if we just look at Bitcoin, I think I took 2 trades in the last 3 months, but those 2 trades were monster. I bought the dip on that reversal, and it's exactly like you said. It's like because I've seen that pattern. I know most people don't know that pattern. They don't know what a fulcrum is, and I
Right.
have the glass notes, so I have the fundamental information too. And I'm looking at this thing, and it's all nothing but positive to me. Meanwhile, everybody's saying it's going to 20,000, it's going to 20,000. I'm like, no, just full fucking size. Buy the absolute bottom. That
Yeah.
one move is 50%.
Yeah.
And
Exactly.
yeah, yeah.
So no
It's like,
stress. Like, you're trading less, so you're not stressing yourself out. You're not taking as many losses. Everyone you're super confident on, and like that's the way to do it. Like you can just relax and trade.
yeah. So that was my 2 trades. There was the bottom. And I didn't sell the absolute top. I don't know, right, where the top is. So I'm sizing
No.
out at I'm looking left. I'm sizing out at the indicators that I think are gonna start selling off, and I bought and a rebought, it went up. So I after I left Binance futures, I took my money and I put it into a Canadian account and DAX, and I put it in FTX. So that took both my funds. Each of those are up 50 to 60% off those 2 trades. Just and
Yeah.
I'm like, and I was killing myself in like February, like just 24/7 on the fucking computer trying to at 10%.
Yeah, exactly. And then you just like it just doesn't become fun after that, right? So it's like you're
It
sitting there like stressing out trying to play these tiny moves, and it's taking up all your free time, like stressing you out. You're making like mediocre money. Whereas if you just ignored all that noise, focused on the perfect setups that line up with everything, all the fundamentals, all the lines, all the news, whatever you need to see, and then you just go all in on, not all in, but you go bigger on those ones, then that's where you make your big money. Like, let's say on these choppy ones, let's say you're making 20, $30, for example. You're making 20, $30 on these like choppy little moves over and over and over, and then you take like a $150 loss. Like it takes you a while to earn that back, because now your confidence is shot too, right? So you're probably going to size down. And then you keep working in this chop, working in this chop, but then one day everything lines up perfectly. Well, if you went big size on that, maybe let's say you make $2,500. why don't you just play the $2,500 play and ignore everything else? You know, like it sounds easy, but it's really hard to do because like it's like we were saying, you spend
Super
all this
hard.
time studying, and you show up at the market, and then it's just like, oh, nothing's moving today, nothing's moving this week. Like I'm bored, I want to do something. I've put in all this time and effort to study. The market will give you what it gives you. We can just sit there and just sit on our hands and just say, okay, like when are you gonna give me something? Like just it's like sitting at like a I don't know. It's like sitting at like a bus stop or something. Like you just sit there
Fishing.
and you wait. Like when's the next bus coming? Like oh there's a car. Like oh, am I just gonna jump in front of the car? Like no, it's not a bus. Wait for the bus. Once the bus shows up, you get on the bus and then you go. Right? You don't worry about anything else that's going by in between.
Yeah. I was exactly that was the exact amount. I was making like 50, 40 to $50, sometimes $60 per trade on the futures, but I was doing it 3, 4 times a week. So it's like $200 a week. It's not bad. But
Yeah.
then this one fucking trade comes along, 3 grand right there. I'm in the hole. And it's
Yeah.
now I have to decide, am I going to take that loss or like,
Yeah. So it's like not only did that wipe out like a month's worth of those
yeah,
trades, more, but it also like it wiped out all that time. So like let's say you're spending 3 4 hours a day on these little trades making to make $200 a week. Then you have that $3,000 loss. It's like Jesus, I just literally lost 200 hours worth of work in like 5 minutes, right? And it drives you nuts.
that's exactly it. I wasn't even thinking about the money. I was just so like drained because of how hard it was to grind up.
Yeah, totally know. It's just like it's never about the money, man. Like, what if I lose $20 or I lose $500? I feel the same. I feel like shit. I feel like I'm like worthless. I feel like I lost. I just want to like sit in the corner and eat popcorn and watch movies and go to sleep.
You know what it's like? It's like you're climbing up this fucking hill and get up there, sit your ass back down. You're like, "Fuck."
Yeah, yeah. It's like you get to the top rung of the ladder and then it just snaps off and you fall down and break your neck. That's exactly what
Yeah,
it
exactly.
is.
Fuck, man. It's all
All
the
right.
psychology.
Yeah. All right. Let's wrap it up there. I think that pretty much
Wrap it
gets
up,
the point
goons.
across.
Yeah, I'm gonna recommend all the goons study their own behavior because like if it's catching us, it's definitely gonna catch them. So just watch it.
Yeah, that's why every day, David and I were doing the same thing. We're always keeping up with the markets because it helps you catch yourself. Like when you realize that things are slipping, because like what I'll do is like I'll just wrap this up quick. But like what I'll do is I'll scroll back like a month or two on all the charts that I've saved, and I'll say, man, every day there was like A+ setups over and over and over and over, and then I'll come up to now, for example, and be like, okay, I'm only seeing like one every week or one every 2 weeks. So like that tells me that it's a slow market, and it tells me that I'm not like my patterns aren't not working. It's just a slow market, right? And then once they start speeding up again, so that teaches me like, okay, I'm not slipping, I'm not losing my edge or anything. It's just like what I'm used to playing just isn't as frequent anymore. So I just need to step back, not trade garbage and wait and just wait and wait. And if I don't trade for a few weeks, then so be it. I don't trade for a few weeks because I know once that setup comes back around, once the markets heat up again, I'm gonna be making money every time again. So
Yeah, I would say the biggest benefit's been you, or at least having a group to talk to about this, so I can get kind of gauge where I'm at and gauge where everybody else is at, and so you can compare,
mm,
like, oh shit, I'm being a little too active, or maybe I'm inactive, or the market. You know what I mean? Like, you know how often am I messaging you all the time? Is like, how's the market doing? Like,
yeah,
how's the small caps, right? I just
yeah.
want to know.
Yeah, exactly. It's good to just have like if you guys have friends that are into this kind of stuff, like start a chat room, like just kind of talk to each other. Like people don't understand this stuff. Like your wives aren't gonna get it, your friends aren't gonna get it. Like it's a really weird niche thing, and like describing the feeling of winning, the feeling of losing, like studying, like all this kind of stuff. Like people don't understand. Like they don't understand the feeling, they don't understand the passion. So like if you can find other people that you can just like it's like like David and I, like we're totally different trading styles. Like same with Brendan. Like we all have completely different styles, but like just being able to talk to each other about stuff and like if we take a loss or like if we're having a hard time, like just being able to speak to someone who understands is really beneficial, and it helps. It really has helped my trading a lot.
Huge, huge. I gotta say, like, as much as I learned in the last 3 years, I probably last 6 Brandon, Sam, and we're just all talking together. I think I grew quite the most in that short
Yeah,
period of time.
yeah, 100%. I'm right with you there on that. So, all right, we'll wrap it up there, guys. Thanks for tuning in. We will see you next week.
See you on the backside.
Yes.